I apologize for the inconvenience this morning in my tutorial room. We seem to be having some technical difficulties this morning, so please bear with me. Okay, I think we're back. Testing 1 2, testing 1 2. Testing 1 2. Bear with me a couple of more seconds here, trying to get this technical issues resolved here on my side. I apologize for the delay. What I would like to do on this segment here is to review the 360-day cycle report that we published in the Associated Press on October 1st, 2021. This was a report basically that confirmed the beginning of the next seasonal cycle of the VCPMI 360-day supply and demand report for 2021 to 2022. Summary. The metals markets are in the completion of a seasonal cycle low, which will put the yearly lows in place. Fundamentals do not appear to be affecting gold and silver, which are trading purely on technicals. The markets are beginning to feel that we may be running into a supply squeeze as we move into the holiday period. The fundamentals of this report, silver is about 32 cents, while gold is down about 250. At this point, basically, I was reviewing the fundamental aspect of the market, that the fundamentals at this point were completely the opposite of what the market was doing. Even though the Feds are increasing, as you can see, the money, the M2, money supplied at record levels. And I said that consumers have a lot of cash and is looking to buy things, but supply chains are constrained. It's a kind of stagflation, and it remains to be seen how long it will take for this situation to be resolved. Tapering is also on the table, off the table, and then back again. It is frustrating when you try to use fundamentals to develop a trading strategy. So we focus on technicals. One of the ways that we do is by looking at longer term trends, such as the gold 360-day cycle. The variable changing price momentum indicator annual gold report published on September 28, 2021 states that the annual trend momentum for the next 360-day cycle is bearish at 1794. The VCPMI, which is the variable changing price momentum indicator, and this is the price velocity, the trend is 1794, and with the market closing below 1794, basically it represents the bigger trend was bearish. The VCPMI is the velocity within that trend, and it came in at 1840, which indicates that a bearish price momentum was in effect. But it's also giving you where the market will revert and potentially explode as we enter into the annual bullish price momentum. And that would be a close above 1840. Stop, because the trend is bearish. So the market needs to go through 1840, and you can use that as a stop level to revert or to reverse into a bullish price momentum. The first thing that happens is when the price goes through it, it becomes neutral. A second close above activates the bullish price momentum, or if it closes below again, it would activate again a bearish price momentum. So what this is recommending on the annual basis, that if you are short, to book profits if the market comes down into the level of 1572, which is the extreme below the average price. Of 1840. And so the second level is 1409 in the next 12 months. Okay. So it's telling you that if you're long, obviously, to take profits at the sell level of 2003 and the sell to level of 2271. The buy levels are also where to enter the market to go long. And the sell levels are where you could enter the market to go short. The average price is 1840 and the moving average is 1794. Since gold below that level, it is entering a period of a bearish trend momentum. If gold closes below that price, it is a bearish trend momentum. The price indicates the velocity of price in relation to the bigger trend. The 9-month moving average is bearish and the price momentum is bearish. So the market has activated the targets below of 1572 and 1409. But if we get through above 1840, then it will shift the price momentum to an extremely bullish factor. It would then activate the targets of 2003 to 2071 for the next 360 days. The VCPMI provides you with pivot points based on artificial intelligence algorithms, and it also provides probabilities for each entry point. What I want to do is take a look at the actual market and see what it's done. And if we focus just on the period, you're looking at a bottom that came in on September 29, 2021 at 1721. That was the bottom that was anticipated, or the cycle date that we anticipated a bottom, and the market confirmed it, because the market is the one that will always confirm or negate the direction of the market. In having this information, I've been preparing for this bottom, and I've been recommending in my trading room to my subscribers basically to use this correction and accumulate. As we can see here, the reversion occurred. The market reverted back to the mean, the monthly mean, which is basically now that once we establish the 360-day cycle structure, then we want to see the short end of the market, how the cycles short term are reacting to the data, the probability numbers that we're using in that time frame. We looked at the annual, which is here on the right of the chart, is giving us the 1840, which is the average price annually. Excuse me. On the left of the chart, you're looking at the monthly average of 1772. And what you see here is that the market has activated a monthly, bullish price momentum. And if we focus on the daily and the weekly, we're looking at the market coming down, activating the weekly buy trigger at 1745. Once it made this low on September 29, the reversion occurred on the money as expected. And this was the beginning of the next calendar year that we use for 2022, for the next 12 months. What this is telling us is that the market has reverted from the weekly now, looking at the short term, the daily, the weekly, and it has reverted the trend to a bullish price momentum, and it has targets short term, depending upon your profile, depending upon how you trade the market, how you trade this particular market. This will give you a very defined structure for you to trade according to your skill, according to your profile. Use this as a GPS. So if you were trading futures, it told you to sell at 1783 to 1796, which is on the left of the chart, and those are the daily numbers. The weekly targets are 1797, which you can see are harmonic alignments that the market once again validated after it told you when you meet your targets, you take your profits. The market reverted, came down to meet the target, came down to the lower level of what it's called accumulation of supply. So it tells you that from this point on, the market is extremely oversold on the blue levels. On the red levels, it is overbought using simple technical analysis. And so the AI behind the algorithm is telling us that now we are in a bullish price momentum with targets short term that go all the way up into the 1825 level, which is the sell to weekly target. This is how I defined my trading plan, basically. And what I recommend and suggest to my traders in my trading room or subscribers, basically, on how to use this incredible trading tool completely transparently. The same methodology can be applied for the other markets based on its own data. And we're going to book some profits here. If you're long, take some profits up here, depending upon your profile. You can, if you're trading in the futures, we are in, pretty much in the red area. That indicates that is an area of distribution now of supply. And that essentially is the area where you can manage your profits. So we're gonna take a profit of 1,000 off the table, and this is in the futures markets. And what you do with this, obviously, depending upon your profile, once again, but I choose to take this profit and invest it long term. So the same methodology applies to basically the other markets that I trade, which is gold, silver, monetary assets that have thousands of derivatives underneath. And depending upon your profile, once again, you can choose to customize a portfolio that would suit your goals for or in objectives in terms of risk and profit objectives. This is a trading tool that I use to trade the market short term, intermediate, and long term. Looking into the digital markets here, it continues to show Bitcoin making record highs and breaking out. It seems that the market is breaking out. The high is 66,890. And it is totally breaking out. So when we look at the Fibonacci Extension, we published in, again, the Associated Press, Seeking Alpha, we're looking at an extension of about initially the 69,513 is the weekly sell-to level, and the Fibonacci extension is all the way up to 88,000 for Bitcoin. And you can see here again, the market is entering an area of distribution of supply. And so if you're long the market and you caught the market down here, we recommend that basically either you use a trading stop or choose your own way of either synthesizing the position or basically, staying long and allowing the VCPMI to tell you basically when the market shifts. And that would be by closing below the levels indicated here, which is 65,620. The target of 66,720 was completed, and that's where we are right now. Once again, thank you for the opportunity to share this every day. And coming back here to the gold and silver markets, my friends, hold on to your longs. I believe, as I showed you, that we are unfolding the third wave of a seasonal pattern, and it could be that the seasonal lows are in place. What we want to see is the market break out of 1840, which will confirm the annual lows are in place.